If you're still unable to find a strategy to use for trading, then in this video, I'm going to share with you the strategy that I use that makes trading extremely simple to follow, helps you to remove the thought process, is very systematic and very simple. So what is this strategy? This strategy simply consists of making sure that you use risk management to remain profitable. That is the foundation of the whole thing. But how I actually trade is by using supply and demand. Supply and demand is when you are finding other positions on the charts where price aggressively went into a particular direction, and we're waiting for price to get back there. When we enter the trade, we're hoping that it's going to do the same at least, the second time. And there are three key aspects to this strategy. Number one is using supply and demand zones. Number two is finding fair value gaps. And the third is market structure. As long as you have all those three, we are now combining all these three together to enter a trade that's also going to take us along into that particular direction we want to go, which is either going to be buys or sells. We're not really trading markets that's going sideways, because that's just going to be a mess. You're literally either taking buys or you're taking sells, and you want the market to be trending in that direction. Now, why does this strategy work? The primary reason is simply because of risk management, which is the first thing that I mentioned. The idea to this is most of the time we're taking 1 to 2 trades per day max. That is the maximum. You're not taking any more. So worst case scenario, you will lose 2 trades, but most of the time the win rate compensates to make sure that at least we are not losing 2%, at least most of the time. Now, the second reason to this is because every time we hit 1R, something has to happen. So this is why I tend to call this my 111 strategy, because I trade the 1 minute time frame. I'm also making sure something happens at 1R, and I'm going to explain that to you shortly. And I'm also trading one pair when I do this as well. And the primary reason to this is because it helps you to also make sure you're not over trading. You're not trading too many, because you're only going to see a handful of setups anyway. So if you're trading multiple pairs, you're going to see too many setups. So the first key part to the strategy is supply and demand, and this is what supply and demand looks like. So looking at, for example, right now, and looking at NAS on the 1 hour chart, we can see that there are many points that price will push up, come back down, eventually consolidates and pushes up again aggressively. And now it sort of consolidates a little bit, and now you can see it pushes down aggressively, and it sort of does this over and over again. If we look at several days back, we can see many points where price pushes either up or down aggressively. Now if we go down to a smaller time frame, looking at the 1 minute now, for example, we can see this same thing on the 1 minute chart, right? You can see price pushes up, comes back down, pushes up again aggressively. And there are also confluences to know when price pushes up aggressively, so you can sort of eliminate the irrelevant price action. So that's the first. Now the second thing we're looking for is something known as fair value gap. Now this is the second confluence that helps us to know when price pushes up aggressively, because in the market, when price shoots up or down in a direction, usually price has to offer whatever that value is. So let's say this magic key, for example, is going to offer it for £1, £2, £3, but sometimes price can go from 1 straight to 5. So obviously price usually has to come back to offer this for £4, £3, £2, right? That's kind of how I like to describe it. So when that happens, where price shoots up from £1 straight to 5, you will see that on the chart there is a gap that has formed. And what this simply looks like is, if we're focusing on these candles right here, we can see that we have this blue candle right there. And from this blue candle, we have this area right here where there are no wicks to the left of it or to the right of it, right? Wicks is pretty much where price has gone to. Let's just put it that way. Wicks has to form everywhere. The price has to go everywhere on the chart. So right now there is this gap right here where there are no wicks to the left or the right. But if you look at these other ones, you can see that this candle moved down. The wick went all the way up to at least make sure these 2 wicks overlap. Same thing here. The wicks also has to always overlap, right? Where there is no overlap, that is where there is a fair value gap. And this is just an indication for us that price is going to come back there at some point. If they come back there and also overlaps with the supply and demand zones that we have drawn, then this is kind of like a double confluence that price is going to go in the direction that we want most of the time. So now we're stacking these two up together, right, to make sure that, okay, when we do enter a trade, it's going to play out. You can see in this example, we have a fair value gap literally in front of the zone right here to here, and price eventually comes up, fills this gap, hits the supply zone, and immediately starts rejecting in the direction that we want it to. So that is just 2 of the 3. Now the third thing is just market structure. Market structure is very important, because this allows us to know where the market is trying to go to. Obviously, if the market is breaking lows, then it means that they want to continue going lower. That's generally the idea. So why market structure is important is because now we're stacking this up with the other 2 to make sure that, okay, cool, we know that they want to keep going downwards. So in this case, we're going to be looking for supply, and we're going to be looking for a fair value gap in front of the supply zone. So some examples of where we can see this is, obviously, if we're looking at this general price action right here, we can see that the market is just going sideways. It's not really going up or down, kind of just ranging. But if we look at this region right here now, we are able to see clearly that price is literally going upwards. It comes back down, it goes upwards again, consolidates for a little bit, eventually comes down, goes upwards, comes down. But generally now we're breaking highs. You can see we're going higher and higher. So every time that price retraces and then pushes up, we have a break of structure to the upside each time. So we can see right now price consolidates, eventually price does break this low right here, then eventually price decides to push up again. So now we've broken these highs right here, and price has actually gone above that high. So this continues time and time again throughout. So this is key now when we're actually looking for a supply and demand zone, because we know what direction to be looking for. Right now we can see prices pushing up, so we do have a zone right here, for example, and we can see that we also have a fair value gap in front because there is no wicks directly in front of here at the moment. And eventually price does decide to come back into the zone, and we would have entered a buy right here and taking this trade all the way up. So that is just a simplified version of it, but I'm going to show you guys more examples. We're going to actually go through a week of backtesting to show you guys more examples, and I'm going to show you a live trade as well of exactly when I've taken this trade. Now, why this strategy will help you to stay very, very profitable is because looking at this trade, for example, right here, when you do enter the trade and you put your stop loss below, once price gets to 1R, this is important. When price gets to 1R, especially depending on the pair you're trading, right? Depending on the pair you're trading, you will know how it usually moves. I usually like to make sure that I trade one that I fully understand, especially indices. This works very, very well with indices just because they move a lot better than Forex pairs. So we can see in this case, as soon as price got to 1R right here, price came back down. Every time price gets to 1R, you want to move your stop loss to break even. You want to. If not break even, then you want to take a small percentage, maybe like 0.25%. off, and then move your stop loss to break even anyway. If you do want to secure some profits, feel free, but you want to move your stop loss to break even anyway. The primary reason for this is because generally this moves very, very quick on the 1 minute. So when NAS is moving up, it's going up. Usually doesn't retraces to stop you out. It will probably hit TP first, and we're looking for a minimum of 1 to 2, a minimum of 1 to 2 each time. So generally you will hit that 1 to 2 before it comes back to stop you at break even. So this means that it helps you to prevent a lot of losses that is just unnecessary. In this case, we can see that price does eventually get to the 1 to 2, right? But we didn't know that it was going to happen. So if you're trading this live, you would have been stopped at a break even, which is completely fine. You would have been stopped at a break even, completely fine. But because we're trading on the 1 minute, you will find a lot more setups. That's the best part about this. You're not waiting too long for another setup either. So if you get stopped at break even, you find another setup, you can choose to take that and carry on about your day. So we can see that we had a setup here. If we're looking shortly after now, I can already identify another setup. If we're looking at this in real time, we can see that there are no wicks directly to the left or the right of this candle right here. We can also see that we have a break of structure to the upside. We broke this high, and we can see that we also have a demand zone, which is pretty much the retracement. So this black candle before the blue candles that eventually pumped up in that direction. So now that we have our zone, we're waiting for price to come back in. Price taps back into the zone, and then we are entering right here. Once we enter right here, we're looking for 1 or 2 in this case. Well, first we're looking for 1 to 1. We got the 1 to 1 in literally 2 minutes, and then afterwards we're looking for 1 and 2. We'd have moved our stop loss to break even at this point. Looking for 1 and 2 now, and we can see that price eventually hits the 1 and 2 super, super quick. So this is pretty much what we're doing over and over again, and it's super, super nice when you combine the 1 minute. The 1 minute is super fast, so you want to make sure that you have a way to prevent any unnecessary losses. So at least if you get 1 to 1, you know that price is going in the direction you want, and you're not losing money after that. So this is pretty much the strategy. And now we're going to go through a backtest about 3 days of me actually taking this trade live, and I'm going to show you guys exactly how it played out. Then I'm going to show you guys a live trading example that I did with the students in Sully's Academy. Okay, so this is the first setup. So this is on Friday. We're going to go from Friday and work our way back. So Friday now we have, let's see what we do find. So right now I can see that we do have a supply zone right here. We have a supply zone right here. We have fair value gap literally in front of the zone because there are no wicks directly to the left or the right of it. We also have broken this low. So price right now is looking super, super good. We can see that they're definitely melting down. We have break of structure to the downside as well. We're just hoping to see if they do tap the zone. So price fills the gap now, has tapped the zone. and now we're waiting for our entry. The entry is simply when they do decide to break or go past one candle. So we can see that in this case, they did give us our entry. So price went past this black candle right here. Stop loss would have been right up here. And now in this case, first of all, I'm looking for my 1-to-1 just to make sure that, okay, at least we secure something or we don't lose any money. So we can see in this case, price actually did stop us out. You can see we got stopped out. So in this case now, I'm not looking for any re-entry whatsoever. We got stopped out and we didn't get the 1-to-1. So that's okay. We'll move on to the next day. So right now, if we're trading on a 100k account, we're risking just 1%. That means we're down 1k, right? So this is another trade now. We can see that price is breaking multiple highs. We broke this high, price pushes up, we broke this high. So we have breakup structures to the upside now. We can also see that we have a setup right here. In fact, we have multiple setups already. In fact, I missed one, but we also had a setup right here as well that has actually played out. So you could have taken either or. So looking at this setup right here that happened before, because that's the one I would have taken on the day. So you can see that we have a fair value gap in front of the zone right here. Price has broken structure to the upside right here. Eventually price came back in to tap into the zone, played around for a bit, and as we're looking for our entry, price went past this black candle right here. So now would have entered for this trade, and we're looking for 1 to 2.15 in this case. Why 1 to 2.15? The primary reason is because this is another supply zone. I don't really want to fight with the supply zone, so I'm just going to leave before the supply zone just to be safe, and that is 1 to 2.15. If you left at 1 to 2, still okay. Some people would have assumed that they would have left at 1 to 4. I know I wouldn't have done that, so I'm just gonna be, you know, direct and honest. So obviously in this case, this is where I would have left. I probably trade, this is literally in May, so I probably took this trade at that point in May as well, and I post most of my trade live on Instagram as well, so you can literally see all my trades on there live every single day. So this is now a 1 to 2.15, so let's just say 2k just to make it easier. So we made 2k now the day before, so this is now Thursday, and we lost on Friday. Now it's Wednesday, we also have the same thing playing out. We broke structure here, we broke structure here, so now we definitely have price pushing to the downside. We have a supply zone right here, which is simply, we have a blue candle that went upwards, and eventually we had a dump to the downside. So we have aggressive sells for sure, and now we're waiting for price to tap back into the zone. At this point is when I would have sent this trade to the students of the academy, let them know, okay, cool, we have a sell coming up, and now we're waiting for price to tap back into the zone. Price decides to tap back into the zone, good rejection. I'm just looking for price to break to the downside at this point, whenever that's going to be. So we still haven't got it, so I'll just keep increasing my stops and just waiting for price to break. So price does break in this case, stop loss is set, I'm in this trade now. If it wins, it wins. If it loses, it loses. Right now we're up 1k, and I'm looking for 1 or 2, just a 1 to 2, nothing else. So 1 minute's played by, that's 2 minutes, 3 minutes, and in 4 minutes we have hit TP. So you can see we smacked TP right to the T, literally right on the dot, and yeah, price continued melting anyway. We still didn't get taken out break even, so this was a clean 1 or 2. Could have taken a 1 to 3 as well, but I would have left at 1 or 2. So now we are up 3k overall. So those are just 3 examples. We can continue showing more examples, but I'm just going to show you guys a live example now. You can see that based on the 3 days, on Friday we lost 1k, on Thursday we made 2k, on Wednesday we made another 2k, so we're up overall 3k in 3 days. Most of the time you'll find setups every single day because you're trading in 1 minute. But let me show you guys exactly how this trade plays out, exactly when I'm taking them, and exactly how I'm reacting when I'm in the trade.
Okay, I'm going to sell NAS. First TP is 1R, but we'll see if we can get the 2. Okay, this is pushing nicely. Almost that 1 to 1 already. I'll just hit 1R. So feel free to leave if you want. Depending on how price acts, I might leave as well. Still got some volume. Okay, I'm out. This one was needed for more content.
All right, as you can see, this was literally a trade I took live. On NAS, the exact same thing. Price literally hit TP in about 6 minutes, melted. We didn't get taken out of break even. So that is pretty much how the strategy works. It's extremely simple to follow because you have your entry, exit, everything is literally set for you. So you don't really have to think too much. You don't really have to mark up so many things on the chart. It's very, very, very simple to follow. So I hope you have found this useful. If you would like to trade with me and actually get my live trade ideas, get my entry, get my exits, trade with the rest of the team, then feel free to join Sully's Academy. The link will be in the description below. You'll also be able to learn exactly what I do from A to Z, my complete strategy. Everything is down below. Any questions you have, I'll be able to answer them as well. and you'll be able to join us on backtesting sessions, on live trading sessions, and you have 24/7 access to me when you're in the academy. The link will be below. If you found value in this video, be sure to like, comment, and subscribe. And thank you guys for watching this video. Peace.